Hello, I'm John Cunningham. Welcome to the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Today on the show, you'll see interviews with executives of 3 public companies. First, Level Brands, stock symbol LEVB on the New York Stock Exchange American. Level Brands creates bold, unconventional, and socially responsible branding for leading businesses. Later, you'll hear about some of their latest developments, including an exciting long-term project in CBD. Our second interview is with Green Spirits Industries, symbol GSRX in the OTC. Green Spirit Industries is in the rapidly expanding medical and recreational marijuana market in the U.S. They're set for rapid growth this year with more than 5 dispensaries opening in populous tourist destinations in Puerto Rico. Combined with recent acquisitions and joint ventures with established operations in California, 2018 could be a breakout year for the stock. Then up third is MamaMancini's Holdings, stock symbol MMMB on the OTCQB. MamaMancini's is a marketer and distributor of a growing line of mostly Italian prepared food items. Their products are available in leading grocers nationwide, and growth has been in double digits, and further expansion is on the way. Learn more when we speak with the CEO. Now, before we get to our first interview, our quote of the week, and it comes from Small Stocks, Big Money. Do your homework, understand the companies you invest in forwards and backwards. This quote comes from Small Stocks, Big Money, a book by RedChip's president and CEO, Dave Gentry, and is available on our website and on Amazon. Now let's get to our first interview today. It's with Martin Sumichrast. He's the chairman and CEO of Level Brands. Let's go to the interview.
Marty, thanks for being with us today.
Thank you, Dave. Thanks for having me.
Now, Level Brands is a licensing and branding company. And for our viewers new to the story, let's start with a brief overview.
Thank you. Level Brands is a licensing and brand management company. We have a 10-year license with Kathy Ireland and Kathy Ireland's Health and Wellness. We own a majority stake in Ireland Men One, or I'm One, Kathy's men's line, and a majority stake in EE1, Encore Endeavor One, which is our experiential entertainment and brand management company. We also own an exciting beauty products line called Beauty and Pinups.
Marty, tell us about Kathy Ireland's background. I'm sure many of our viewers are familiar with her, but for those who are not, tell us about her background and the role that she plays in your company.
Yes, Kathy is the chairman emeritus of Level Brands. Kathy's career, as many people know, started in the modeling business. Kathy was one of the most successful swimsuit models in the world. Shortly after leaving that career, Kathy went into the licensing business. And over the past 28 years, Kathy and her team have built what is now the 25th largest licensing brand in the world, Kathy Ireland Worldwide. Kathy Ireland Worldwide sells 17,000 SKUs in 55,000 retail outlets around the world. Forbes estimates total sales at over $2.5 billion a year. Kathy's an extraordinary businesswoman with an extraordinary moral compass, and everything we do at Level Brands revolves around Kathy's 10 Millennium Development Goals, which we even put in our prospectus. And every customer we do business with, we help promote those 10 Millennium Development Goals, which, as Kathy likes to say, teach, inspire, and make the world a better place.
Marty, what's the essential value proposition for investors today? Why should they own your stock?
Thank you, Dave. First of all, we have no debt. Second, we are fully funded. Third, we've generated more business in the first half of our current fiscal year than we generated the entire fiscal year from last year. Finally, we're in the process now of adding more contracts, cross-selling to our different clients, throughout the different brands we have. And we believe that these additional contracts and the cross-selling of our different products will generate significantly more revenue as we continue through the fiscal year on into next.
And I'll also note that you raised $12 million at $6 in an IPO recently. And of course, today, as of the recording of this video, this interview, of course, the stock's trading actually below the IPO price.
We did complete our IPO in November of 2017. We raised $12 million, sold 2 million shares at $6 a share. We're now fully funded. We're using that capital to build infrastructure to service the clients that we have. I'll give you two great examples. One client is Demiva. Demiva was one of our first clients that we brought in under the brand management business, EE1. We were excited by the reaction in the marketplace when we announced the Demiva contract. Demiva had been trying to get into big box retailers for quite some time. Once the big box retailers heard that Kathy Ireland Worldwide and Kathy Ireland Health and Wellness and EE1 was supporting Demiva, we got calls, and now they're experiencing sell-ins to some of the big box retailers that they were trying to get into. Oxygen Water has hired EE1 to go out in the marketplace and help create distribution opportunities. Due to our relationship with Oxygen Water has been able to increase their door count significantly since we got started. These are two great examples of how we help our customers take their products and move them into distribution and ultimately generate additional sales for our customers, which under the terms of our agreements provide payments to us under our royalty stream. So really important part of our business, making our clients happy and building the infrastructure to help take care of our clients is a critical goal for us at Level Brands.
You mentioned earlier you signed a $32 million deal with Isodial. Tell us about that contract and what's your initial payment and how those payments break out, and a little bit about what you're going to be doing for them.
We received an initial payment of $2 million of equity in Isodial to start the contract. Isodial is a Canadian-based company that trades on the Canadian Securities and Exchange. It also trades here in the United States as well as on the German exchange. So there's a very robust market for the shares. We receive $750,000 of equity at the end of every quarter. So that's $3 million a year. So for this calendar year, that would mean $5 million. Beyond that, every calendar year, we receive another $3 million under the service part of our agreement. As I said earlier, the royalty part of our agreement gives us a 3.5% cash royalty payment on products that are sold that bear the Kathy Ireland Health and Wellness logo or one of our others, which could be I'm One. It could be Chef Andre, who I got to tell you made some of the greatest chocolate chip CBD cookies I've ever tasted. So we're excited about that. There's a lot of different potential uses for CBD that Chef Andre is thinking about, cooking oils, those kind of things. So we get paid on all that as we help Isodial bring it to retail globally and sell that. So it's a nice piece of business that we think could add significant amount of recurring revenue to Level Brands and our shareholders.
Right. Talk to us about the margins. I know in this business, you don't own assets. You have pretty high net margins. So talk to us about that.
You know, one of the things at Level Brands we like to joke about is that we don't want to own the cow. We just want the milk. In other words, We don't need to own the brands that we represent. We need to help our brands grow their business. And that's critical for people to understand our business model. If our customers are happy, if our customers are selling more products, then that's good for us. And that's what we do at Level Brands and Kathy Ireland Worldwide, is help our customers sell more of their products. And under branding, this is a very powerful tool to help in that process.
What major milestones can investors expect in 2018? And are you putting out any revenue or earnings projections for the year?
We are not currently putting out revenue or earnings projections, but our milestones are, obviously, we want to generate as much business, top line revenue growth as we can. But one of the most important things that we have to do is bring products to market. Our brands are relying upon us to help their sales growth. So in the case of Oxygen Water or Demiva or Isodial, helping them expand their retail distribution is critical to their businesses and is critical to our business model. Remember, to the extent we can help them expand their businesses with our brands on them, we get paid for doing that. We get royalties as those products sell. So we want to try and increase store count, product SKUs, ultimately revenue of all the brands that we represent. And I think it's an important milestone for our company, is to deliver that to our clients.
Marty, in summary, why should investors take an interest in Level Brands today?
You know, I look at Level Brands and I ask myself the question, if I had to go out and acquire from scratch everything that we've built and acquired over really the last 18 months, that's bringing in Kathy's Health and Wellness, bringing in Ireland Men One, bringing in Encore Endeavor One, signing contracts with the likes of David Tutera in the wedding space, Romero Brito in the art space, SG Blocks in the environmental construction space, Cure, which is exciting specialty vape retailer, and what's going on there, Isodial, which we've talked about, and in sunglasses and in bespoke tailoring for the I'm One brand, Oxygen Water, who's our exciting energy drink, Demiva, who touches the women's health issues and has an extremely important product line to help women. You're looking at something that when people look at it say, we're really surprised that we've done all this in such a short period of time. And on top of that, go public and get fully funded and do it without any debt. So I think the value is in what we've done over the past 18 months. If we can continue to grow at this rate, given the fact that our stock's down from the IPO, gives a really interesting perspective for new investors to look at the company. And when you look at everything we've done, I don't think you could do this again for what we have into it. It's it's really remarkable. But when you've got Kathy Ireland as your partner, amazing things happen. She's incredible. She's one of the finest people that we've ever done business with. Myself personally, I cherish the relationship, and I'm really excited about what we're going to do. And as Kathy says, we're just getting started.
Marty, thank you so much for being with us today and taking your time to share the story.
Dave, thank you very much. Have a great day.
Now, to get more information about Level Brands, visit levbinfo.com. See research reports, fact sheets, presentations, and the latest videos. It's all free. You can even subscribe to email alerts to stay on top of the latest news. Now, our second interview today is with Les Ball. He's the CEO of Green Spirits Industries. Let's go to the interview.
Les, thanks for being with us today.
Thanks, Dave. Great to be here.
You know, over the years, you've built some great companies. You've been involved in some very large organizations. You now head up Green Spirit Industries, much smaller company than what you've been involved in your career. But talk to us about your career.
Well, it's interesting. My background, 50 years working, but 45 years in the retail business. I spent 22 years with Macy's, starting from the bottom. I was a buyer, a department manager, the whole thing. I was chairman and chief executive officer of the Midwest division, president of Macy's Wholesale, which was interesting, which had me overseas pretty much 4 to 5 months of the year for 5 years. And then I did 2 years at Montgomery Ward, where I was president of apparel and their foreign offices and their private label, which is another interesting experience. But the one that probably relates, well, one of the ones that relates most to this is I decided I wanted to do something a little more entrepreneurial a little later in my life. This was in the early 90s, and I invested in a small chain of Western and workwear stores. There were 30, some of them. It was relatively to this, it was a small business from where I came, and we built it to 140 stores, a couple $100 million, sold it. I then spent 8 years as vice chairman of the board of an e-commerce tech company, which was another interesting. It was a startup. I got to watch how you start a company, how you build a company, et cetera, et cetera. And now this, and this to me is the opportunity of a lifetime. We're sort of the .com bubble right now in terms of a burgeoning business that's just beginning.
Well, let's talk about Green Spirit. What does the company do, and what are your future plans?
Well, Green Spirits Industry, right now, it's a public company, as you know. We have leases for 5 dispensaries on the island of Puerto Rico, in addition to which we're in ongoing talks right now with some other currently up and running companies to make acquisitions.
Les, what's the essential value proposition? Why should investors consider owning Green Spirit Industries today?
Well, first of all, as you know, we're about to open 5 dispensaries on the island of Puerto Rico, and I'll talk to you about the timing of that. And we have several LOIs out there right now where we're talking to companies on the mainland to make important acquisitions. We're well funded, we're professionally managed. And if you look at the industry right now and the kind of multiples that these companies are getting, and then look at Green Spirits with professional management, money in the bank, and careful management, it becomes a pretty interesting, pretty compelling investment. In addition to which, if you look at what happened in Canada with Constellation Brands, here you have a beverage company that just put $200 million in a cannabis company. They know something. They're not going to just throw their money away. So I really believe that cannabis is, it's alcohol at the end of Prohibition. The medicinal qualities that the plant has when it's properly mixed is mind-boggling. So you've got millions of people that would like to use the product. You have millions of people that have a need to use the product. And now it's becoming legal.
Well, I understand in Puerto Rico there's a $500 million black market just for marijuana. So people come from the islands to Puerto Rico to buy. What is the market size just for Puerto Rico?
I'd be guessing, but it's going to be huge. I mean, they're saying that's a $50 billion black market in the country right now. So if Puerto Rico's 3 billion, 5 billion. I don't think we can put numbers on it at this point. But the opportunity is endless.
What does the funding look like? You did raise $3.3 million in your initial funding from private investors. What are your plans to when you acquire these companies? Will you be issuing stock, cash? What's your plan?
We have a raise going on now. We will raise more money. We've been very frugal. We still have very comfortable cash reserves in the bank, and we're going to keep it that way. But we'll need to raise some capital for the acquisitions.
Again, I want to talk about the actual value proposition again for investors in terms of 2018 revenue possibilities. Give us a little more flavor.
Well, for 2018, we should have, I'm going to say should have, and plan to have 5 dispensaries open and operating in Puerto Rico. And the build-outs are first class. These are quality dispensaries. These are going to be places that people are going to be very comfortable in, very proud to go to.
What about recreational marijuana? What do you plan to do in that space, and how big is that market?
Well, you know, we know what happened in Nevada. I mean, it went recreational, and in 48 hours, the state was out of product. I mean, as states go recreational and we're in the market, we're going to go recreational.
To recap, what's the key takeaway you want investors to remember from this interview?
Well, I think, again, you asked the value proposition. If you look at what happened in Canada with Constellation Brands, they paid $200 million for a small company because they see the future. If you see the future of cannabis, if you will, both medical and recreational, then it's a no-brainer in terms of what the growth is going to be. I mean, because we're starting at almost nothing. I mean, even if you look around the country in terms of how much is being done, who's doing it, there aren't that many established, well-funded, professionally managed companies. This is an opportunity to be part of that. You know, we know how to do leases. We know how to open dispensaries. We know manufacturing. I spent 5 years, you know, manufacturing all of our private labels. So we know how to manufacture. We know how to deal with both customers. We know what customer service is. Customer service is everything in any business. And so many of these companies now don't quite understand that the way we do. So we'll have a great culture of customer service, an efficient operation, well-funded and carefully expensed.
Excellent. Les, thank you so much for being with us.
Thank you, Dave. Great to be with you. Thank you.
Now, to get more information about Green Spirits Industries, visit GSRXinfo.com. You can see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. Now, our third interview today is with Carl Wolf. He's the CEO of MamaMancini's Holdings. Let's go to the interview. Carl, welcome to the show.
Thank you very much. I'm very happy to be here.
Carl, MamaMancini's is a marketer of specially prepared frozen and refrigerated all-natural food products. Let's start with a brief overview of your business and what sets it apart from any competition.
The major thing that sets us apart is our very high quality and taste. Our products, for the most part, are shipped frozen to supermarket and club store chains. They then, that holds for a year. They then take it out of the freezer, put it in the refrigerator, and is served as fresh product. And so our product is very, very fresh when the consumer sees it. Our line consists of a whole variety of Italian products. It evolved from just meatballs 3 years ago to meatloaf, stuffed meatballs, ABF meatballs, chicken parm. New items are ravioli lasagna, sausage and sauce, and stuffed peppers. We also will be coming out very shortly with sauces by themselves, and we have, on a very limited basis, have a vegetarian meatball. The product we have is made with very simple ingredients. As we say, you can recite them. We have no artificial flavors or ingredients in our product. Nutritional profile is very positive, very high in protein, low in calories, very high in antioxidants.
What's the essential value proposition? Why should investors take an interest in MamaMancini's today?
Well, we're growing very rapidly. Our last reported quarter show around a 50% sales growth. We believe that will continue. We have several chains that we are first getting more business with. We are in active negotiations with Kroger, Albertsons, Safeway, Walmart, Sam's Club, Costco for new items. If all of them happen, which we think we have a good possibility, we should increase our spots on supermarket shelves by up to 25,000 locations. We now have 43,000. That would be a 60% increase. So we're one of the fastest growing food companies and any type of company going right now. The company is very leveraged. We have very, very small increased expenses. So we're making about 25% incrementally on each additional sale on EBITDA level. And we believe if we get to 50 million, which is our goal by the fall, we would make between 8 and 10 million EBITDA. So a very, very rapid ramp up.
Let's talk more about your business model. How exactly do you make money, and what's your marketing strategy?
Well, we make money by keeping our overheads very low. So we have very competent management, so we can handle a lot more volume. We also are going after larger accounts, which and their headquarter accounts, so we can deal with them. We believe that each incremental sale will add around 25% EBITDA to the company. We do not see great increases in overhead. We are marketing our product line through a very targeted approach, and that consists of 4 pillars. First one is we're very active on QVC, which has around 30 million viewers. We are one of their top producing items in sales per minute. In fact, we were on QVC 6 times in the month of March. Dan Mancini, our co-founder, is our spokesperson and very, very well received there. In addition to that, we have very active Facebook. Individual posts get up to 1 million impressions. We have 200,000 likes. We can geo-target customers within 5 miles of a specific store. So if a chain is coming out, let's say with a new item for us, we can geo-target every one of the stores of those chains. In addition to that, we have a very significant presence on Sirius Radio. We typically will do a flight on 12 channels, anywhere from 1,000 to 1,500 commercials nationally, and we do that several times a year. It's been very, very successful. Some of the channels are on CNN, Howard Stern, Today Show, Fox, MSNBC. The last pillar of our marketing is a very active public relations campaign. In the past year, we had about 200 million consumer impressions.
How big is the market for your products, Carl, and what regions are you in right now?
Well, the prepared food sector of supermarkets are somewhere over $10 billion in sales. It's growing about 8 to 10% a year versus the center of the store, which is decreasing 1 to 2% a year. We believe our business has a natural evolution to $200 to $300 million in supermarkets and club stores as they adopt more products from us. There are many chains that only buy one item. But I also should mention that our product can take a variety of forms, such as sandwich shops in supermarkets. We haven't really touched the food service business at all, which is, or the convenience store business, and that is as large as the supermarket business. And then we also have export. Everyone loves Italian food throughout the world, and we have not really done anything with industrial sales where other people buy our product and use it in their own products. So we feel we have a reasonable goal over the next several years of hitting about 300 million in sales, earning around $50 million EBITDA.
Now to recap, what's the main takeaway for investors? Why should they own your stock today?
Well, first of all, in our sector, because the regular branded business is having struggles on margins and sales, the organic and natural food part of the food business is being awarded valuations of 18 to as high as 30 times EBITDA. There's been also a number of acquisitions in the field, which have been in the same ratio, 20 to 30 times EBITDA in the last several years. Right now, our company has a valuation of around 35 to 40 million. If we can get to our proposed or our projected sales and EBITDA number of 8 to 10 million by the run rate by the end of the year, and if we hit the same EBITDA ratios, et cetera, you have a company that has a very, very substantial valuation. That would be approximately 25 to 30 cents a share. And today, as of March 27th, our shares are priced at $1.14. So you can do the math. It could make a very attractive situation, let alone the fact that we're one of the fastest growing companies in the public market today. So I think, there's good valuation. Another thing is we do not see a need for extensive new capital or dilution in the shares over the coming years.
Thank you. We look forward to hearing more from you, Carl, and the company in the future.
Thank you very much.
Now, to get more information about MamaMancini's holdings, visit MMMBinfo.com. You can see research reports, fact sheets, presentations, the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the news. Now, let's recap the 3 public companies we met with today. First, Level Brands, symbol LEVB. Kathy Ireland has built the 26th largest licensing operation in the world, doing $2.6 billion annually in retail sales. Now she's lending her talent, experience, and more to Level Brands as its chief brand strategist. The company IPO'd on the New York Stock Exchange American last November and was priced at $6 per share. It's recently been trading as low as $4 per share. With significant growth forecasted in the quarters ahead, this presents a great opportunity to get in at a better price than the IPO participants. Then we met Green Spirits Industries, symbol GSRX. Green Spirit is set for rapid growth this year with more than 5 dispensaries opening in popular tourist destinations in Puerto Rico. If we combine that with recent acquisitions and joint ventures with established operations in California, 2018 could be a breakout year for the stock. Then we met MamaMancini's, symbol MMMB. Their sales are up more than 60% in the most recent quarter, net income up more than 150%. With aggressive expansion underway, growth should continue well into 2018 and beyond. For more information about any of these 3 companies, visit their respective website on the screen now. On each web page, you can see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. Now remember, these stocks are for your speculative money. Gains can be significant, but you must be prepared for the downside. You can read our full disclosures at RedChip.com. That's it for this episode of the RedChip Money Report. Thanks for being with us today, and we'll see you next time.